$365 billion in outflows. We've got a crisis on our hands, guys. Let's roll that intro and get right down into it. Hi guys, welcome back to another walk and talk video. Welcome back to a very cold start here in the United Kingdom, and we're going to be discussing a little bit about what's going on in the space. And there's a few things that we need to discuss, specifically with kind of the fundamental wider macroeconomic climate, because it's not as strong as some people want you to believe. So let's get right down into the nuts and bolts of today's video, right? So $365 billion in outflows. Now, this does not relate to cryptocurrency, at least not directly. This is $365 billion of outflows from the US banks. Now, this is pretty significant, and there is basically a second coming to the US banking crisis in 2024. It's very real, and it is very much likely to unfold, I would have thought, by Q2. And I think what we're going to see is we're going to see more from the Fed in terms of printing in order to kind of bail out what is to come from that kind of angle. Now, the banking crisis is local banks. This is your more regional banking. This isn't your JP Chases of the world, but there is going to be some issues with US banks from a regional point of view. And 365 billion leaving the banks is a pretty significant amount for the banking sector. And there's a lot of other things that we can dive into. I'm not probably going to do it justice in today's video, so it's probably worth doing some research on the subject matter, because it is a lot of things to think about when it comes to the amount of money flowing away from the banks. Now, obviously we have had our fair share of banking issues here in the UK. We spoke about this quite a bit a few weeks ago, specifically with, Chris being debanked by Santander. And obviously a whole host of other people have come forward to say that they've been having problems as well, listing a whole host of other banks as well. Now, the UK obviously is just one country of a few million people, but I think this problem is going to spread much further and much wider than just the UK. It's kind of really a good place to kind of start. But I think these problems with the banking sector and the banking sector wanting to avoid people getting too involved in crypto, they'll throw, these kind of statements out there saying that it's for your own protection and, it's risky and you might lose all your money and all these kind of things. But in reality, well, the reason that they don't want you to do these things is that it's going to take money away from the banks. And they need that net deposit, essentially, in order for their business models to actually work and operate. Okay, and these are obviously things that are compounded with the banking sector as well, when it comes to what exposure to risk they've got. And there's obviously quite a bit of risk that they've taken on board. And obviously with the interest rates over in the US moving the way they have done, it has actually compounded a lot of the issues at the regional banking sectors, or within the regional banks and the banking sector over in the US. Okay, so this is a big crisis, and it's going to fuel a lot of movements in the stock market, and it's going to fuel a lot of movements in the crypto market as well. So that's the first thing. And then the other thing that we have to kind of put alongside everything that's going on with the banking crisis is we have to look at the Fed's monetary policy, right? And what we can see here is that interest rates have been rising after they offloaded a load of bonds, right? And so what you're going to be seeing now, essentially, is the banks getting squeezed even harder as these interest rates remain quite high. But eventually what you'll find is that the interest rates will decrease. This is known as a Fed pivot. Now, when a Fed pivot occurs, this essentially is when the interest rates decrease rather than increase. And this is a pretty bullish movement, and it has bullish tendencies in the market, as in we're able to see, money printer turned on, we're able to see institutional investors start to buy up assets. But the bad news is that the Fed pivot, or the reduction of interest rates in the US, only tends to happen once the market is at its worst. Essentially what I mean by this is once the liquidity has dried up there isn't really a lot of money to be putting into the market as the Fed actually pivot and reduce their interest rates. This means that retail investors generally are selling off their assets in order to maintain their lifestyles. So you generally find that when a Fed pivot happens, the markets crash. The stock market historically has had movements of around 50 to 55% during a Fed pivot. So when we see those corrections in the market after a Fed pivot, that ultimately is fantastic news, because it does mean that the money printers will be turned on and we're going to see a good lift in the price action of stock market and of course cryptocurrencies. Now you couple that with a potential banking crisis, it might be that the bank crisis over in the US is what ultimately turns on that Fed printer and gets those interest rates actually reducing down. So I think there's a lot of things to kind of be thinking about when it comes to the bigger macroeconomic climate and currently where the stock market and the crypto market are positioned. And so with all of these bigger macroeconomic situations and scenarios unfolding, it's really hard to see all of these other bullish influences coming out giving their bullish ideas about the crypto market. They don't really align to the bigger macro picture. And so I want to kind of just talk about a couple of things that I've seen. Some influencers on TikTok and X and various other social media platforms talking about, right? And so the first thing that I've seen a lot of people kind of trying to look at and kind of try to claim as a bullish idea as to why the market is likely to really surge on upwards is the daily chart for Bitcoin. Okay, now the daily chart for Bitcoin has higher highs and higher lows being printed, and it sounds fantastic. Basically, you've got momentum supporting the idea that Bitcoin is moving up and it's unable to be brought down lower than the previous swing low. These are all fantastic things. And they're great if you're able to see them under a bullish scenario, as in when you start to see the price action of Bitcoin with higher highs and higher lows with very little overlapping structures. Now, in the case of Bitcoin's daily chart, what we're actually finding is a very much an overlapping higher high, higher low situation. And this, unfortunately, does have a higher probability of breaking down rather than breaking up. I talk about this a fair amount on the technical analysis videos that I do. And you can go back and you can draw these over and over again on the historical price movements of Bitcoin, and you'll see the exact same thing. When you have higher highs and higher lows, they have more of the tendency to break down than break on up. That's not to say that you can't retest the higher line of the trend line or the higher range of the trend line. You absolutely can. But the probability of a big break to the upside when you see higher highs and higher lows on an overlapping candlestick structure is very, very unlikely. The next thing that kind of crops up quite a bit to kind of support the idea that maybe we're just going to the moon is that actually there isn't really a huge appetite in open interest, right? And so the open interest has basically dried up a little bit. Not a lot of interest in it. And that is being used by some influencers out there as a bullish indication. And it may be, I mean, there's definitely are some scenarios where it can be, but for the most part, to any kind of normal person who looks at that, it just shows that there's a lack of interest and a lack of an appetite to be getting involved in Bitcoin at the moment. And it's understandable why. When we start seeing those high highs over high lows, overlapping candlestick structures with RSIs and stochastic RSIs being the way that they are, and of course, we've got all the bigger macroeconomic things to slot in as well. Why would institutional investors be really that interested in getting into a risky asset right now? They generally aren't. Then we have the other things that are kind of cropping up in the background, which is that we can see that spot trading volumes are higher than the perpetual futures trading volumes. And that's also being used as a bullish idea. Essentially, we've dried up, we've gone through all of the kind of the revenue when it comes to Bitcoin on the perpetual futures. So with a shift to spot trading over futures, I think we're going to see, ultimately, very interesting market in Q1 of 2024. With everything that is going on with the wider economic climate, with the banking crisis over in the US, a Fed pivot, ultimately I think the Bitcoin spot ETF news being a sell the news event, My expectations of, the first quarter of 2024, unfortunately, is very much a negative one. But I do think that there's positivity to be seen, because as soon as we see Bitcoin correct down to a nice healthy level, we see profits getting taken, we see all the technical indicators getting reset, and we see ultimately a Fed pivot, we see the banking crisis unfolding, we'll see banks getting rescued, we'll see printers getting turned on. I think we'll be in a really bullish environment with fantastic surges to the upside in quarter 2, quarter 3, quarter 4 of this year. Let me know what your thoughts are in the comments down below. If you want to know more about the technical analysis, why not check out this video right here.